Welcome to the Capital News. I'm your host, Alex Karitis. Today is Wednesday, September 23rd, 2020. Thank you so much for joining me. The title of today's podcast is Does Crime Pay? This is going to be a continuation from our Monday podcast, Banks Caught Red-Handed, and that article that we were reading from BuzzFeed that focuses on a massive amount of documentation that BuzzFeed and other news agencies, and in particular independent investigative journalists, have their hands on. Of course, they're not supposed to have their hands on these documents, but they do. So this is going to be akin to the Edward Snowden files, when we were informed of the massive surveillance programs that the government was running, not just on international constituents, if you were international individuals, but on U.S. citizens here at home, and how they were working hand in glove with some of the largest tech companies in this country. And is it any surprise that those same companies have been leading the stock market to new heights? I don't think that's coincidental at all. This would be akin to something that WikiLeaks, when you see a big, massive data dump from WikiLeaks or document dump from WikiLeaks, and the Panama Papers that came out a few years ago as well. This is supposed to be a government of, by, and for the people. That means the people have to know what's going on. Do we have to know, the most classified of information? No, I'm not arguing for that. But we cannot just simply say, all right, well, this is a national security issue, this being the government, so you, the people, you can't know anything. I don't buy that. At the heart of the Constitution is the understanding that that document in this country is based off of distrusting the government. That's why our government is supposed to be small and limited, not have massive surveillance programs, not have one department after the next keeping documents, stamping them classified when they shouldn't be, and then wonder why there's so much mismanagement and distrust by the people for their government, why there are protests on the streets, etc., etc. We can handle the truth, but we need to know the truth. And how are we supposed to be responsible citizens and elect the right people to office and even have serious national conversations about what really matters if we're not told what really matters? So does crime pay? And of course, this really hits at the heart of the banks, because time after time after time, they get away with it. They get away with it. The executives are not held to account. The board members, who are supposed to be fiduciaries and looking out for the shareholders, are not held to account. They're not sued. They're not criminally or civilly liable. They're not paying any fines. They're not having the handcuffs slapped on their wrists and being sent to jail. It doesn't happen. It doesn't happen. They have deferred prosecution agreements. They pay a fine, slap on the wrist. Again, they don't pay it. The shareholders do. And they get right back into bed with a lot of these criminals. They know it. They don't care, because crime pays. So we're going to talk a little bit more about that, obviously. And before we get started with that, I do want to cover market performance. And then just as a heads up, I may not be doing a podcast tomorrow or Friday, just as a heads up. If that's the case, I will do one, maybe two, over the weekend to make up for the podcast that I don't do for Thursday or Friday. Obviously, tomorrow is going to be our typical analysis of initial jobless claims, Federal Reserve's balance sheet, what have you. So I definitely want to make sure that I cover that. It just may not be tomorrow or Friday, but it'll be over the weekend. So count on that. And nonetheless, but in that same vein, we are still having expectations of initial jobless claims 840 to 860,000. That's astronomical. That's still tragic. That's still heartbreaking. That's still in the wrong direction. For those who may say, well, at least it's under 1 million. Yeah, that's true. It is under 1 million because we were at or above 1 million for so long. But this is still devastating. This is not in agreement with a super V-shaped recovery. And again, that's why we have Tweedledee and Tweedledum, Chairman of the Federal Reserve Jerome Powell and Treasury Secretary Steven Mnuchin, saying, hey, we need to do more. We need to do more spending. What a joke with these people. But hey, I guess it's the level of their incompetence that moves them further and further up the corporate and political ladders. So on the market front, we have the dollar index trading at 94.406, so still with that 94 handle. Quite the counter rally in the dollar index, and of course that means a lot of weakness in cross-currency pairs. Recall only a few short weeks ago we had the euro to the US dollar at $1.20. It's now at $1.16. We had the British pound to the US dollar at $1.34. It's now at $1.27. The Australian to the US dollar was about 75 cents. It's now 70. And on we go. But what's still interesting, and I wrote this in my write-up to yesterday's podcast, is the fact that we're seeing this dollar strength. But when we look at Uncle Sam's 10-year junk note, we're still at 0.67%. There's no movement. So my question in yesterday's write-up was, is this a flight to safety in the US dollar? And why is there a flight to safety? I thought everything was going swimmingly well everywhere, right? Everything's just getting better and fantastic and phenomenal. So why would there be a flight to safety? And if there was a flight to safety, wouldn't we also see a flight to safety in Uncle Sam's debt across the yield curve? And most definitely it should be picked up in the 10-year. But it's not. It's still range-bound. So what's going on here? Is this one of those situations that I was discussing yesterday and have done many times before? Is this one of those broken correlations? Or is this just simply not a case of investors moving their money to what might be deemed a safe haven? Could this be something else? Could this be a signal, a sign of liquidity drying up through the system? Even though the Federal Reserve, in conjunction with the federal government here in the United States, threw out trillions of dollars, most of it courtesy of the Banana Republic printing press, it's drying up. The swap lines that the Federal Reserve engaged in with other central banks, is that drying up? There is a massive, massive amount of US dollar denominated debt around the globe. It's due. So that creates a demand for dollars. Now, I've said this here many times before. You may think it makes me sound wishy-washy or I'm just hedging my bet. No, it's not. The dollar can continue to go down or it can have a swan song because there is so much at play. If we have that dollar swan song where it just keeps going higher and higher and higher, that's going to create that dollar doom loop that we discussed several times before. If it continues to go down, well, that's not going to be good here at home in the United States because it's going to make everything that much more expensive, okay? And that's really the effect of inflation. It's not inflation. Inflation is an expansion of the money supply. The effects of that inflation is higher prices. And it can be in consumer goods, it can be in services, it can be financial assets. It all depends on where that money is going to go. It's going to go at a different rate. It's going to be asymmetrical. It's going to take time. You can have both, but it's a process. The question is, what's going on here? How urgent will the federal government respond to this? How urgent a matter is this that is going to make the Federal Reserve respond to this? Because if you continue to see a strengthening dollar, in all likelihood, we are going to continue to see weakness across the board in equities, especially here in the United States. And if President Trump Thunder Thumbs, obsessed with the stock market as he is, continues to witness a massive decline in the stock market or a continuation thereof over the next month and a half, well, what is he going to do in order to try to get it back up? Because he hangs much of his hat on the stock market, which of course is ridiculous, but that's what this man does. So those are important questions to ponder. This is far from over. On the index front, overnight futures trading, we have the Dow Jones Industrial Average in the green but flat. We have the S&P also up about 0.1%, and the NASDAQ 100 is also slightly in the green but still relatively flat, up 4 points. Japanese cash trade is down 200 points, representing a decrease of 0.9%. Across the pond in Europe, a sea of green, with the biggest gainer in the UK markets, the FTSE 100, gaining 1.2%. Cash trade in Australia, despite their massive rally yesterday over 2%, they are now trading down 1.2 percentage points. Chinese markets are also down 1.5%. On the share front, we have Apple trading down 4% for the day. Tesla continues its volatile swings, down 44 points, representing a decrease of 10.3%. So Tesla is back and forth. They were off to the moon, 5-to-1 stock split. Everybody thought they were going to be 5 times richer. That's not how it works. So the day of reckoning obviously came, and then we've been just back and forth with Tesla, but still trading at $380 a share. Microsoft giving back 3.33%, Amazon giving back 4%, and Alphabet, the parent company of Google, also giving back 3.13%, and Facebook, to round it out, gave back 2.25 percentage points on the day. On the commodity front, we have WTI trading at $39.40 a barrel, Brent, the international metric, at $41.34, and despite the dollar strength, we are still seeing oil range-bound, which is somewhat surprising to me at this juncture. I think something's going to give one way or the other here. I think on a simple supply-demand side of the equation, prices should be lower. However, and with the dollar strengthening as well, it should be lower. But is the oil market looking further out? Is it ignoring these fundamentals for the time being? Or is it some sort of geopolitical risk that markets are trying to sniff out? And if that's the case, then we could very well see higher oil prices. So that's why we mention these on a daily basis. Natural gas is trading at $2.21. Gold and silver continuing to get hit. Gold spot is at $1,856 an ounce. Silver down another 73 cents right now at $22.14, primarily off of the back of this strengthening dollar. Silver and gold mining stocks are also getting hit. I look at this as an opportunity. This is quite possibly, ladies and gentlemen, I have no evidence to really support this other than what's going on. But this could very much be some sort of rotation play by some major players getting out of those high-flying stocks, the tech stocks, what have you. And with it, it's bringing down the broader market. Could there be a rotation back into gold and silver? Quite possibly. I mean, I look at this as a buying opportunity. I mean, you might have technical questions about these things, but fundamentally speaking, nothing has changed. It's only going to get worse before it gets better. So people will flock back into gold and silver, I do believe, and in those gold and silver mining stocks. So I think it's the place to hang out for quite a while. Nothing fundamentally has changed here. Is the market thinking that the Federal Reserve and the federal government are on hold for a little bit? That's possible because of the vacant U.S. Supreme Court seat, and that's what Congress is going to be more focused on as opposed to passing some sort of other round of spending. That's quite possible, but net, nothing fundamentally has changed here. And we know what's waiting in the wings. We know that there's still 30 million Americans still collecting some form of unemployment benefit, and we know that there's a lot more that just aren't collecting anything, but they're still unemployed, but they're not counted. We know about the millions of foreclosures that are waiting in the wings. We know about the countless number of bankruptcies and insolvencies, and with it, the massive amounts of layoffs. These things have not been addressed. The market is going to have its day with all of this, and it needs to. That's the solution. There is no easy way out here. And if central banks and federal governments want to claim that debts and deficits do not matter, well, then we don't have to pay taxes anymore. And I would argue that we don't even have to pay our bills anymore because that's how the logic would follow. What's good for the goose is good for the gander. If it's good for the government, then it's good for me. If it's good for the government, then it's good for you. You understand? But they don't want to come out and say that they are already incorporating and that we're living in an MMT, modern monetary theory world. They don't want to come out and admit that. It's a con job. They want to make you believe that everything is just fine and dandy, everything is under control, when it isn't. We spent several $1 trillion up to this juncture, and this is all we have to show for it. And it wasn't free. So just keep that in the front of your mind, not the back, but the front of your mind. So that's some of the market performance. Again, does crime pay? It's the title of today's podcast. So I want to continue where we left off on Monday, and that was with the statement from the Treasury Department. And this is another letter from the Treasury Department. Another statement, I should say. In a subsequent letter, FinCEN's general counsel said that disclosure of SARs, suspicious activity reports, can make banks less willing to file them, which could mean law enforcement has fewer potential leads to stop crimes like human trafficking, child exploitation, fraud, corruption, terrorism, and cyber-enabled crime. To me, ladies and gentlemen, that is a laughable statement because this is something that banks have to do. This is a regulation. They have to comply with this. Making banks less willing, I mean, am I more or less willing to pay taxes? But guess what? I don't have a say in it, do I? They know we're less willing to pay our taxes. That's why they take it out of our paychecks before it's even in our pocket. So this less willing has nothing to do with it. Banks have to file these SARs. FinCEN did not respond to repeated invitations to discuss security concerns. Senator Ron Wyden, a member of the Senate Intelligence Committee, which requested some of these SARs, said the FinCEN files investigation, quote, reinforces the fact that we now have two systems of law enforcement and justice in this country, end quote. Drug cartels move millions through U.S. banks. Poor people go to jail for possession. Quote, if you're wealthy and well-connected, you can figure out how to do an enormous amount of harm to society at large and ensure that it accrues to enormous financial benefit for all of you, end quote. And doesn't the senator hit that right on the head? And it shouldn't matter what Senator Ron Wyden, his political affiliation is it? Should not matter, because that is a true statement. Banks can get away with this, drug cartels can get away with this, human traffickers can get away with this. But if you're some poor schmuck that's got an ounce of weed in his pocket and the cops catch you, they're going to lock you up and throw away the key. This is why people are protesting. It's whatever the catalyst might be, that's just the final straw. People know that a two-tier justice system in this country exists. They know that a lot of these institutions are crumbling, are failing, and that's why people are protesting, and it is not going to stop anytime soon. Robert Mazur, a former federal special agent and expert in money laundering, said that making this material public, quote, could enhance national security, aid future investigations, and encourage institutions to more consistently adhere to SAR filing requirements, and will hopefully get people who are in position of power to correct an apparent systemic failure. So there you have it. There's always two sides of the coin. Keep everything hidden or disclose. Okay? So there's always two sides of an argument, if not more. Based in the United Arab Emirates, Mazaka General Trading presented itself to the world as a wholesaler. But between March of 2013 and April of 2014, the company received nearly $50 million from 5 companies involved in a Russian money laundering ring that manipulated international stock trades. In May and June of 2014, it received more than $4 million from a Singapore company that appears to barely even exist. It was also sending and receiving money from British firms located at 175 Darks Lane, Darkes, one of the world's most notorious addresses for shell companies, which are a common tool to hide ownership. It's like a James Bond saga what's going on here. These transactions by Mazaka General Trading, which the Treasury Department later declared to be a part of the Kahani Money Laundering Network, a group that has financed terrorism and drug cartels around the globe, involved businesses and people far from the shores of the United States. But as the money pinged around from one bank to another, it was all tracked and it would all be reported to the Treasury Department. Because the U.S. dollar is the lifeblood of international finance, the common denominator between the world's disparate currencies, banking customers around the world need access to it. But only select banks are licensed to conduct dollar transactions. So, smaller banks in other countries partner with larger institutions, which exchange their customers' pesos, yuan, or dirham for greenbacks. For a fee, of course, the arrangement, known as a correspondent banking, helps keep the global economy humming. As they pass through U.S. banks, these transfers give the Treasury Department a advantage that no other country has. The Treasury Department shares some of that information through the Egmont Group, a little-known coalition of financial intelligence units from more than 150 countries and territories. SARs have provided Egmont members with financial details that would be otherwise unattainable, such as those concerning former Olympic Committee member Lamine Diak, who has been sentenced to prison for crimes connected to the Russian doping scandal, and the Russian oligarch Oleg Deripaska, who was sanctioned by the U.S. 2 years ago. But if the database is a powerful asset to law enforcement investigations, to privacy advocates, it is a nightmare of overreach. Congress created the current SAR program in 1992, making banks the front line in the fight against money laundering. But Michael German, a former FBI special agent who is a national security and privacy expert, said that after 9/11, the SAR program became more about mass surveillance than identifying discrete transactions to disrupt money launderers. See, that's very much akin to the Patriot Act, which of course is the unpatriotic act. Like I said, if the Congress is going to pass something, you're probably in the 90 percentile probability of whatever they call it, it's the opposite. We got the CARES Act. We know it's the Nobody Cares Act. So you get the Patriot Act following 9/11. It's one of the most unpatriotic pieces of legislation that was ever legislated into existence. So this is just another example of mass surveillance. Okay, so today he said the data is used like the data from other massive surveillance programs. Find someone you want to get for whatever reason, then sift through the vast troves of data collected to find anything you can hang them with. That's absolute power, ladies and gentlemen, and it is very, very scary, especially when you're on the other side of the chopping block. In 2017, when U.S. congressional committees began investigating the last presidential election and other matters, they too turned to the Treasury Department database. They requested SARs on Deutsche Bank, which loaned Trump money, Christopher Steele, the former MI6 agent who wrote the so-called Trump dossier, an array of Russian oligarchs, Trump's former campaign chairperson, Paul Manafort, and even a small casino in the Pacific run by a former Trump employee. All told, they were looking for information on more than 200 entities. FinCEN unearthed tens of thousands of pages of documents. Those documents, along with a few additional SARs requested by federal law enforcement authorities, make up the majority of the FinCEN files. Some were never turned over to the committees that requested them. A person familiar with the matter blew the whistle to multiple members of Congress. The collection does not include any SARs about Trump's finances. A source familiar with the matter told BuzzFeed News that FinCEN's database did not contain SARs on either Trump or the Trump Organization. And though the documents show suspicious payments to people in Trump's orbit before and after key moments in the 2016 presidential campaign, they do not provide direct information on any election interference. Because these searches were so broad, however, they revealed something that most in Congress hadn't even been looking for. Evidence that the world's biggest banks kept doing business with clients that they themselves suspected were facilitating terror and corruption, as we talked and discussed on Monday, and goes to the heart of today's podcast. That question, does crime pay? They're making too much money working with these drug dealers and money launderers and everything else. They're not going to, they're not going to give it up. The information was laid out in transaction by transaction, and it had been there all along. The other thing I want to note, too, before we continue, is the fact that it is also an interesting fact that the government, which is, by its nature, a law enforcement institution, puts sort of the banks on the front line of this. But banks are private institutions. They are not law enforcement. So should there be a system that exists that makes it efficient and effective for banks to flag suspicious activity? Of course, I agree with that. But how much responsibility is actually on the banks to do something about it? Now, I think they do have a responsibility to do something about it, because we're not talking about, little sisters of the poor here. We're talking about drug cartels. We're talking about human traffickers. We're talking about terrorism. So if there is suspicious activity, there is a responsibility on behalf of these banks to, at the very least, flag these transactions with these SARs, and perhaps even go further and stop doing business with these individuals and or corporations. So I just wanted to point that out, because the government, it's their job to conduct the investigations, to connect the dots. And the government always, it just, once it starts trying to do something, you got to comply with it. If they want you to do their dirty work, well, and they pass a law, if you don't comply, you might be in trouble. But it always seems like the banks somehow are the exception to that rule. Continuing, FinCEN received more than 2 million SARs last year. That number has nearly doubled over the past decade as financial institutions have faced mounting pressures to file, and the volume of international transactions has grown. Over the same period, FinCEN's staff has shrunk by more than 10%. Sources there say most SARs are never even read, let alone acted upon. That is not surprising. Meanwhile, experts say some banks treat SARs as a kind of get-out-of-jail-free card, filing alerts about a huge array of transactions without actually moving to halt them. In some cases, banks filed numerous reports on the same clients detailing their suspected crimes over the course of years while continuing to welcome their business. By December 2013, J.P. Morgan Chase had filed at least 8 SARs on accounts in companies controlled by Manafort, flagging more than $10 million, according to a FinCEN research report. Manafort, who went on to become Trump's campaign chair, was convicted of bank and tax fraud in 2018. Paul Pelletier, a former senior Justice Department lawyer who once led the agency's fraud unit, said that approach makes a mockery of the system. You can't just file SAR after SAR after SAR without eventually violating the money laundering laws, he said. You cut them off and drop them as clients, but you do not keep taking their money. That would make sense, but we don't live in a commonsensical world, do we? Despite the bank's sweeping powers to investigate account holders, the FinCEN Files investigation reveals that major financial institutions often fail to perform the most basic checks on their customers, such as verifying where a business is located when someone opens a new account. The lapses allow criminal groups to hide between shell corporations, registered with no identifying details about their ownership, and slide the proceeds of their crimes into the global financial system. In many cases, the banks appear to have no idea whatsoever whose money they are moving. And I believe that to be the case. And probably the majority of the case, the banks, they don't know. But they also don't care. There's too much money being made. When investigators for HSBC's American operations asked their colleagues in Hong Kong for the name of the person who owned Trade Leader, a company that had moved more than $500 million through the bank in less than 2 years, the answer they got was, quote, none available. The company would reportedly emerge as an important hub in the so-called Russian laundromat, a sprawling scheme in which wealthy Russians, facilitated by banks, secretly moved their money into the West. After scandals like the Russian laundromat, federal prosecutors have made big pronouncements about forcing meaningful change. Addressing an anti-money laundering conference in 2015, Leslie Caldwell, then the head of the Justice Department's criminal division, said that when it came to getting banks to clean up their acts, deferred prosecution agreements, which typically involve a fine and a probationary period, can often accomplish as much as, and sometimes even more than, we could get from criminal conviction. But the FinCEN Files investigation shows something very different. Banks often get to the end of their agreement without actually fixing the problems. What a surprise. Then, instead of getting the prosecution that they had been threatened with, they just get another chance, and sometimes another. In 2012, HSBC faced a historic crisis. After permitting narco-traffickers to launder money and conducting business in off-limits countries such as Sudan and Myanmar, the bank was fined $1.9 billion. It promised to change its ways. And to hold it to that promise, the government installed an independent monitor to keep close watch. But the FinCEN files investigation shows HSBC continued banking and profiting from the same kinds of customers that got it in trouble in the first place, such as the Panamanian import-export firm that the Treasury Department later said was laundering money for drug kingpins. You know, this is HSBC, and this is several years ago. If I've mentioned HSBC many times before, because they are at the crux of what's going on in Hong Kong right now. And you recall Lehman Brothers, their collapse, over a decade ago. If HSBC goes down, and it could, and it very well might, it's going to make Lehman Brothers look like child's play. That was the warm-up to the show that might go on. So just pay attention to this, because this stuff has not gone away. It has not stopped. And there's a lot of tension still in Hong Kong, especially with China coming down with the various laws that they have passed, trying to gain a bigger control or exert more control, if you will, over Hong Kong. So it's something to pay attention to. And we'll end with this one. JP Morgan Chase got a deferred prosecution deal of its own. For years, it was the primary bank of the world's biggest Ponzi schemer, Bernie Madoff. Despite multiple warnings from its own employees, the bank never filed a suspicious activity report on him and allegedly collected $500 million in fees. For punishment, the bank was required to pay a $1.7 billion fine and promised to improve its money laundering defenses. Oh, I promise this is the last time. But after it settled the Madoff case, the bank's own investigators said they suspected it had opened its accounts to an alleged Russian organized crime figure who is known for drug trafficking and contract murders, assassinations, as well as businesses tied to the repressive North Korean regime, which the U.S. has placed off limits. Some of the biggest criminals, ladies and gentlemen, wear fancy suits and have nice smiles and very fancy, expensive degrees on their walls. And we're told to look up to them. This is not the behavior you tell your children to look up to. This is what goes on. We don't want to believe it, but this is what's happening. Numbers can be exaggerated, but I told you how fractional reserve banking works. And then once this money is in the hands of these bankers, they collect fees on this money as is, and then it can be commingled with their trading desks, which can then be used to lever up 10, 20, 30 to 1, what have you. And if they make out, then they make out. They take the profits. If they make a bad bet, a bad wager, and it's really, really bad, and it can cause some sort of systemic event, well, then guess what? We, the taxpayer, bail them out. This is not the system that we should have. I am focusing on this and will continue to do so because this needs to be discussed. This is not going to be talked about during the presidential election. A lot of members of Congress don't even know what's going on, which is no surprise to me. But this is just par for the course. This is a system that is collapsing under its own weight. This is the incompetence. These are the people. These are the institutions. These are the corporations that line these politicians' pockets in their campaign coffers, and they got them dancing on a string in their pocket. This is why the two-party system has to go. We have hypocrisy on full display right now with the Republicans. If the situation was reversed, it would be complete hypocrisy by the Democrats. I don't care, you understand? I can't lose with these people when I go after them. I'm consistent. I don't play sides because I don't have a side here. I don't have a favorite with these two idiots with these parties. I'm on the side of freedom. I'm on the side of liberty. I'm on the side of you living the life that you want to live. That's what this country is supposed to be about. We got to raise hell about this because nobody else is going to. You at least have to know what's going on. Because otherwise, they're just going to keep you distracted with the circus. And that's exactly what they want. So, again, I might be off tomorrow and Friday. Most likely that will be the case. But I will be on the weekend to at least do our typical analysis of the Thursday data. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.